watching Business World Live. I'm Danie, Laurel.
And I'm just Delos Santos. It's the start of a new trading day, but first, let's go straight to our top story. The country's budget deficit swelled in October on the back of a decline in state spending and weak revenues. Data from the Bureau of Treasury showed that the budget shortfall rose by almost a quarter to 61.4 billion pesos last month. This brought the year-to-date deficit to a record 940.6 billion pesos, almost thrice from the 348 billion pesos in the same period last year. Economic managers expect the gap to hit 1.8 trillion pesos this year, and that's equivalent to 9.6% of GDP. Revenues for the month of October slid nearly 13% to 228 billion pesos. This is the seventh consecutive month of year-on-year contraction since April, as businesses are still operating on limited capacities due to quarantine restrictions. On the other hand, spending for the month declined to almost 290 billion pesos from nearly 311 billion pesos a year ago. Despite the slump in October, overall spending in the first 10 months was higher by more than 12% to 3.3 trillion pesos, with the Treasury attributing this to the government's COVID-19 response and assistance programs. ING Bank Manila senior economist Nikki Mapa described the latest spending data as disappointing, saying the economy could have used the much-needed stimulus from government spending. RCBC Chief Economist Mike Ricafort said the government needs to ramp up spending, especially releasing the remaining funds from the Bayanihan II law to boost economic recovery.
Profit-taking is taking hold of local markets, and with the month of November quickly passing us by, what is there to expect as we try and leave 2020 behind? Here to chat with us, we have ICCP's Manny Ocampo. Good morning, sir, and welcome to the broadcast.
Hi, good morning, Danie. How are you?
I'm good, thanks, sir. Now let's kick off with the general index to begin with. It's seen some great highs here. We've managed to stay above 7,000. A lot of profit taking, however, in the past couple of days. Is this, run up to 7,000 something that was fundamentally driven by, for example, the earnings, by the opening of the economy, or was this a lot of the excitement on a vaccine that might now be waning?
Well, on the upside, there were quite a number of factors that led to the uptick in the PSE. For example, third quarter numbers they're not good, but they are also not as bad as we had previously thought they would be. GDP, for example, while down on a year-on-year basis, is actually up on a sequential quarter-to-quarter basis. So that's good. The U.S. elections, vaccine prospects have all fed into, shall we say, the bullishness in markets, not only in the Philippines, but I think in other countries as well. So that has been the case. And, we'll probably see volatility. I think people have to note that this will be very volatile. It's a trading market, so you get in out. Hopefully, you get in at the lows and get out at the highs, something like that.
Okay, so still a thin trading range here. We're actually below 7,000, just a touch down 0.6%, opening at 6,950 levels. Manny, you mentioned the U.S. as having an impact here, particularly the elections. Now, lately, there have also been some economic data. You've got the U.S. jobless claims back-to-back rise weekly and widening trade deficit, and that seemed to be pulling the markets down overnight in the U.S. Does that signal, a shakier recovery, and will that be spilling over into the region?
Well, unfortunately, when you have a hiccup in the U.S., most other markets, especially the emerging markets, suddenly get sick. Now, so we're caught in that. So, it's something to be expected. I don't think people were really looking at a big turnaround at things. Maybe you look at the first half of next year to see a real turnaround economic results, and that will be guided maybe by first quarter numbers more than anything else. No, so even in the U.S., I think yeah, people take a trading stance over there, and that's how it will be. People will take a look at the opportunities to buy and sell. The main problem of a lot of fund managers also is that the alternative on fixed income securities is just not there. So
Where
at
do you
record
put
low,
your money?
yeah, at record lows or practically no returns on fixed income, I might as well trade the market, I think, is what people are saying.
Sir, when you look at how investors offshore are acting, does it show you that the second wave of lockdowns are not as bad as the first? Or
Yes.
are you actually and they're actually still having some risk appetite?
The lockdowns, if you notice, are in US, no, are more localized, which a lot of people have been pushing, to adopt here in the Philippines as well, or at least NCR, localize the lockdown so that areas that are really not affected are able to carry on with life a lot more normal under our new normal. But maybe spur more activity, spur more commerce out there. So we hope the government was saying, well, I think we've accepted the GCQ until the end of the year, but the hope there is that next year we really are able to relax the quarantine situation that we find ourselves in, and maybe impose lockdowns on a very localized basis.
Are you seeing that reflected in our net in our foreigners coming back in? Because we've still seen this run up to 7,000 was really the domestic investors here pulling the weight. What is it going to take for the foreigners to start buying in, especially since, I mean, if you just look at the numbers, we seem to be doing better than the other countries that seem to have more elevated cases?
Yes. Okay. I think the foreigners, no, to really settle down in the Philippines, need to be assured, or need to be, shall we say, need to understand the direction of where government will, take the recovery story. No? Unfortunately, our responses on quarantine or lockdowns, etc., have not helped us. So we've been less on the maps of the foreign investors. But we'll see them come in and out. They will trade our markets, so that's not totally bad. If you notice over the last maybe 2 or so weeks, value turnover was quite encouraging.
Mm-hmm.
We're at about average of about 10 billion every day. So it's good. It's good for our market. People are starting to take positions or maybe put more activity into the market, and that's important.
And do you think, sir, a reason for this is that they find the valuations high for at least for our index? We're still, at a 5-year high, if I'm not mistaken. I can pull that chart out for you. But is that what's keeping them at bay, or as you mentioned, it's really just them waiting for the government's plan in response?
Well, the Philippines has generally, over the last so many years, has, for example, traded generally at some kind of premium, whether we deserve it or not, relative to our ASEAN neighbors. No, so that's one. So that's par for the course already. But I think you know the the statement that we are at high valuations, I think, is coming from the point of view of we have not really done adjustments yet on what the earnings outlook would be for next year.
Okay.
There are a number of analysts or a number of houses already revising major conglomerates' earnings up. No, so yeah, it may look we're trading at high PEs, but if we start doing the adjustments, we may be at the mid-teens or so, which is provides a good opportunity for gains.
Okay, so it's actually justified if we have those higher earnings coming in from next year. Sir,
Yeah.
are you starting to rotate your portfolio into the cyclical stocks?
Um, I Normally I'd say yes, but unfortunately, with the way the virus has really impacted the economy. I guess we'll see food, for example, pick up this last quarter. Because of Christmas spending and all. But the traditional retail, we're seeing them. We should see some kind of pickup again, but again, not as much as what we had seen in the past years. No?
Okay, sir, maybe one last question on a specific space that I want to talk about, which is the property sector. You're very much involved, of course, in the REIT space, but just general question on the REITs. Why is the sudden interest in REITs at this period, towards the end of the year? Is it anything to do with the property sector having seen a rebound in November? And if so, what actually led to that?
Yeah, I think on the REITs, good question. First of all, it's a question of returns, Danie. Fixed income securities, for example, are what 2-3% for a 3, 4, 5 year instrument. The REITs will give you a REITs, for example, will come up to a close to a 6% or maybe a slightly more than 6% annualized yield, assuming they're able to execute and really fulfill their dividend payments. So that's a superior yield compared to your fixed income securities. And Ayala is Ayala, so that will be there. So people have shifted maybe from fixed income and are looking at REITs as an alternative. Now the REITs, because they are traded and they are listed in the PSE, also provide a very good liquidity mechanism. If you were a fund manager that needed to get out, maybe shift your portfolio or shift some of your committed numbers in committed investments in the REITs to Ayala land, for example, because there's a good potential. You can do that. You can execute that trade any day without losing your interest or your income on the REIT. No? So there you have liquidity, you have yield available to you.
Okay, thank you so much for those insights. As mentioned by Sir Manny Ocampo of ICCP, the REITs being attractive right now when the yields of other alternative investments seem to be lower than what's available. Thank you for that, sir, and thank you for joining us this morning.
Thank you also, Dan.
All right, guys. So for now, I am actually going to be hosting Business World's virtual economic forum. We're on day 2, but before I let you guys go, I will hand you over to Jess, who will, of course, give us the highlights of day 1. Take it away, Jess.
All right, Dan, I'm not going to hold you any longer. We were there day 1, and it was a fully packed forum there, but a lot of highlights there, really. But I guess one of the more crucial parts here is you have NEDO Secretary Carl Chua saying that growth levels in the country will actually go back to its pre-pandemic scenario or to 2019 levels come mid-2022. He acknowledges that there will be scars and delays, particularly in education, which according to him will be an impediment to future productivity and income of families as well. But he's saying as well, there can be an acceleration of growth here if focus is given on recovery programs. The key policy for now, according to him, is to actually open the economy safely. Again, we have this contextualized things. The government is projecting that come 2021, growth will be at 6 to 7%, coming from a low base in 2020. At the same time, come 2022, they are maintaining their growth forecast here to 6.5 to 7.5%. But to bolster growth, according to Carl Chua, what's needed really is to restore consumer confidence. But how exactly is the government going to do that? Well, according to him, the government is going to prioritize strengthening the capacity of healthcare system in the country that is to accommodate more COVID patients. But discussions on the health crisis has already evolved to vaccine talks, and this is where much of the confidence is going to hinge on. The government, of course, is in the latest forum here, you have Finance Chief Sonny Dominguez saying that the government is going to borrow some 73.2 billion pesos for vaccines here for 60 million Filipinos. That should be enough, according to the DOH, for us to actually achieve herd immunity, which according to standards set with the World Health Organization is going to account for around 60 to 70% of the population, according to Edsel SALVANA. He is a director of the Institute of Molecular Biology and Biotechnology over at the National Institutes of Health over in UP Manila. He did say that vaccine program may actually start as early as April 2021, and vulnerable sectors will be prioritized until the general population has been gradually covered by the mass inoculation. At this stage, is saying it's important not to overwhelm hospitals. This as people try to learn to actually cohabitate with the virus, but there's danger and complacency, is warning. At the same time, he's really driving the point, that vigilance is going to be very crucial at this stage. He is, however, optimistic that the virus will be eliminated, given the high efficacy rate of vaccines, especially those that have already made huge progress here. You have the likes of Pfizer, Moderna, and even AstraZeneca. According to SALVANA, there's a 90 to 95% chance of herd immunity as well. But lots of things in order for us to actually recover from the virus, and the private sector is going to take a crucial role in that recovery phase here. You have a Business World President and CEO Miguel Belmonte saying that it requires a whole of government approach and a whole of society response here. At the same time, you have Jorge Brende, president of the World Economic Forum. He's saying that we're still in crisis mode and we're not yet in the recovery phase, but the Philippines can pretty much capitalize on its young population and great ties with the biggest economies in the world to actually bounce back from the crisis. At the same time, you have Bernardo Mariano. He is a chief digital information officer of the World Health Organization, is saying we need to harness the technology to actually ramp up response to the pandemic as health sectors actually pivot to digital. At the same time, he's saying that we need to address inequities in access to broadband. Now, Guillermo Luz, he is the Chief Resilience Officer of the Philippine Disaster Resilience Foundation. He also said during the Business World Virtual Forum, he did say that the crisis actually emphasized the need for small businesses to have a business continuity plan. So there you have it again. You have Carl Chua expecting the country to actually go back to 2019 growth levels come mid-2022. Now we'll have more news when Business World Live returns. Stay with us. morning. You're still watching Business World Live. I'm Jess Delos Santos. Government borrowings to fund COVID-19 related expenses have fueled growth in the bond market. The Asian Development Bank said on Wednesday that its peso bond market grew 8.8% in the third quarter to 8 trillion pesos. This is higher than the 5.2% growth rate in the second quarter, while year-on-year growth rate was at 21.5%. The bond market consists of 80% government bonds and 20% corporate bonds. Outstanding government securities totaled 6.5 trillion pesos as of end September, up 10% quarter-on-quarter and 24% year-on-year. This as Treasury bond issuances offset the decline in sales of T-bills. The regional lender noted the Bureau of Treasury's move to defer its Samurai and Panda bonds issuances this year as funds raised domestically were seen enough to cover government's financing requirements. Now, an environmental think tank is urging the Energy Department to step up its policymaking efforts to bring the power sector to a full and swift transition to clean energy. The Center for Energy, Ecology and Development noted the economic impact of the pandemic and disastrous climate calamities in the country, which they said should fuel the shift towards more sustainable energy use. Energy Secretary Alcusi on Tuesday outlined a low-carbon scenario for energy policy which increases the share of renewables in the power supply mix. In an early stage, possibility of clean energy sources account for 66% of energy mix within 20 years. Last month, the DOE ordered a ban on new coal-powered projects with the goal of making the power supply mix more flexible. The group said that while there have been efforts to reduce the country's dependence on coal, the DOE must set policies in place to ensure the transformation of the power sector to clean energy. The measure banning contractualization in the private sector hurdled second reading at the lower house. The bill mandates regular employment as a general principle and seeks to amend the country's labor code, mainly to prohibit labor-only contracting. Exceptions to this rule are cases involving OFWs, workers on probation, and temporary replacements of absent regular employees. Under the Security of Tenure Act, labor-only contracting exists when the contractor does not have substantial capital or investment like tools, equipment, or machinery in the workplace. In 2019, President Duterte vetoed an earlier anti-ENDO bill for banning forms of contractualization that do not particularly harm employees. The new anti-ENDO bill will give the Labor Secretary the right to make appropriate distinctions between labor-only contracting and legitimate job contracting upon consultation with the National Tripartite Industrial Peace Council. The Board of Investments is seeking to attract investors in electric vehicle manufacturing by focusing on production of wiring materials. This to help the sector bounce back from the effects of the pandemic. The government's Make It Happen in the Philippines International Investment Campaign will focus on the automotive, aerospace, electronics, copper, and nickel, and business process outsourcing sectors. Trade Secretary Mon Lopez said the areas of focus were selected based on how they could fill value chain gaps. BOI notes that the country can fill in the value chain gap in the auto industry by focusing on copper, nickel, and similar products in which the Philippines enjoys advantages in terms of access to supply. The BOI approved investments fell by almost a fifth to 826 billion pesos in the first 10 months compared to the agency record of 1 trillion pesos last year. The SSS warns that implementing the planned expansion of benefits for retirees affected by the pandemic will likely erode the finances of the pension fund. The proposal to expand pensions by at least 1,000 pesos a month was pushed by lawmakers and senior citizen groups. However, the SSS expressed reluctance as a plan could cause the fund's financial position to deteriorate amid the COVID-19 crisis. The first tranche of pension increases was approved in 2017, while the second was supposed to take effect in 2019. Senior Citizens Party List Representative Rodolfo Ordanes now calls for the immediate release of the second tranche of pension increases to aid pensioners affected by both the pandemic and recent typhoons. Ordanes notes that a little over 2 million pensioners will benefit from the hike. And that's a first look into the business day this Thursday, November 26, 2020. Catch us again tomorrow at 9:30 a.m. I'm Jess De Los Santos. We are One News.
Lang yan. Hey, say hello.
Ako ba? Hello?
Hi, Justine. Good morning.
Hello? Yes?
Hi.
Hello?
Kamusta?
Si Charles ba to?
Yes.